Senator from Rhode Island.
Thank you, Madam President. When we passed the Wall Street reform...
Senate's in a quorum
Oh,
call.
excuse me, Madam President. I would ask for the dispense in the calling of the quorum.
Without objection.
Thank you, Madam President. When we passed the Wall Street Reform and Consumer Protection Act, we did so in response to a financial crisis that shook the foundations of our economy and devastated so many of our hardworking constituents. For example, the Dow Jones dropped from an average of 13,677 in July of 2007 to an average of 7,235 in March of 2009, resulting in a 47% loss. Nationally, the unemployment rate increased from 5% in January 2008 to 10% in October 2009. And in Rhode Island, the unemployment rate was even higher, increasing from 6.2% in January 2008 to 11.9% in December 2009. In short, we had to do something to respond and avoid another financial crisis, because behind each of these harrowing numbers were our constituents and their families, who saw their life savings and their jobs and their homes evaporate in a flash. That something was the Wall Street Reform and Consumer Protection Act, also known as the Dodd-Frank Act. And I'm proud to have drafted and supported several of its provisions, such as the creation of a consumer watchdog, the Consumer Financial Protection Bureau, the CFPB, whose primary focus has been on protecting consumers from unscrupulous financial activities. My bipartisan language calling for a dedicated Office of Service Member Affairs at the CFPB, which helps ensure that our service members and their families are protected in the consumer finance space in the same way these servicemen and women protect us. That is now a part of the CFPB, and it's done remarkable work protecting the men and women of our armed services who do remarkable work protecting us. And also, I was able to provide an additional $1 billion in funding to the Neighborhood Stabilization Program, which provided targeted emergency assistance to help local communities acquire, redevelop, or demolish foreclosed properties. And frankly, in the wake of the crisis, every city and many rural areas were seeing foreclosed properties sitting there, reminding us all of the devastation. With these resources, they could be repurposed for families to live in, or if they were so decrepit, they could be demolished for urban development and economic development in rural areas. And these are just a handful of the many good and worthwhile provisions in the Wall Street Reform and Consumer Protection Act. But like any other major piece of legislation, it was not perfect. Years ago, the custom used to be here that we would come together and agree on technical fixes to comprehensive legislation. It was almost predictable that after you had a complex piece of legislation, you discover unintended consequences, and we'd come together on a bipartisan basis to fix those technical issues without having to relitigate the entire bill. Unfortunately, that moment to make needed fixes never happened. And while the legislation before us today makes changes to the Wall Street Reform and Consumer Protection Act, I am concerned this legislation may actually go too far and go beyond the needed technical fixes. For example, I worry this legislation may actually make it tougher for community banks and credit unions to compete against larger financial institutions, despite the regulatory relief provisions of this bill for smaller financial institutions. This is because the legislation encourages large financial institutions to grow even larger, from $50 billion up to $250 billion. It does so in part by removing some of the extra oversight provisions we put in place with the Wall Street Reform and Consumer Protection Act, such as making sure large banks undergo strong and robust stress tests to ensure that they have their own sufficient rainy day funds, and that any type of problem is not funded by taxpayer bailouts. In addition, this legislation may further encourage larger financial institutions to grow by increasing their competitive edge for the kind of business and customers currently served by community banks and credit unions, which should be concerning to all who support our smaller local financial institutions. Larger institutions can absorb costs more than a small institution. They can have programs that cost them a lot in the short run, but drive out the competition in the medium and long run. They can provide, because they can spread the cost over bigger institutions, services that might be better provided, more personally provided by smaller institutions, but they will be pushed out of the marketplace. So the potential net result in this bill may, ironically, make it more difficult for regulators to first stop a threat to financial stability from a larger bank, while increasing competitive pressures on community banks and credit unions. To address some of these concerns, I have filed several amendments to improve the bill and add needed protections for consumers. Let me describe some of these amendments in greater detail. One amendment seeks to prioritize regulatory relief for institutions with a strong history of doing right by their customers. In the legislation before us, federal financial regulators are given the discretion to provide regulatory relief to certain financial institutions, and in so doing, to consider factors they deem appropriate. My amendment simply directs the regulators, when exercising this discretion, to also consider whether the financial institution in the preceding 24-month period paid any federal fines or penalties, and to consider whether any violation or settlement related to an alleged violation of the Service Members Civil Relief Act, or the SCRA, or the Military Lending Act, and if these violations could have been avoided. Again, a strong emphasis in protecting the men and women who protect us, our service members. And these two pieces of legislation, the SCRA, the Service Members Civil Relief Act, and the Military Lending Act, are the strongest protections our men and women have against financial abuse by institutions. In short, how well an institution serves its customers, including our servicemen and women, should help determine whether certain financial institutions deserve the regulatory relief provided under the bill. And I hope we can, on a very strong bipartisan basis, adopt this amendment. It just seems so clear to me that when we're giving relief, we should give it to those who have earned it, those institutions who have treated our servicemen and women well and have treated their customers well. Another amendment I filed would empower the CFPB and its Office of Service Members Affairs to enforce existing SCRA safeguards, the Service Members Civil Relief Act safeguards, such as those that protect our service members from being overcharged. This amendment is needed because despite the importance of the SCRA's protections to our service members, enforcement of this critical law has been inconsistent and subject to the discretion of our financial regulators, which can change with each administration. According to a July 2012 report from the Government Accountability Office, the estimated percentage of depository institutions that serviced mortgages that were examined for SCRA compliance varied wildly, ranging from rates of 4% in 2007, 17% in 2008, 18% in 2009, 26% in 2010, and then dropping down to 15% in 2011. And you can see that sort of cracked with the financial crisis, where at a point after 2000 and 2008, the regulators understood the threats that were being posed to servicemen and women in terms of their mortgage obligations, but that seems to be fading. We can't lose focus on protecting the men and women who serve us. And as someone who had the experience and the privilege of leading soldiers as an executive officer of a paratrooper company, I spent a lot of time trying to explain to people trying to collect from men and women in uniform that they couldn't because the law had set certain interest rates which they exceeded, that they couldn't because they were violating what was called back then the Soldiers and Sailors Civil Relief Act. We need an agency of the government, not individual members of the armed forces, to protect these men and women. And I think that's what we're trying to do with this legislation. Simply put, prioritizing the consumer protection of our service members should not be discretionary. It should be mandatory. And this amendment ensures that the SCRA enforcement will be permanently a priority of the CFPB and its Office of Service Member Affairs. It's supported by more than 30 organizations, including National Military Family Association, the Military Officers Association of America, the Veterans Education Success, Student Veterans of America, and the veterans of foreign wars of the United States. We also need to do more to protect student loan borrowers. There is a growing private market to refinance student loans, including federal student loans. I've filed an amendment to require lenders to disclose the benefits that borrowers might forfeit, such as income-driven repayment plans, loan forgiveness, and deferment options when they refinance a federal loan into a private loan. And I've also filed an amendment to clarify that the Education Loan Ombudsman at the CFPB should monitor and report on student loan complaints for all education loans, including federal student loans. Additionally, I support Senator Durbin's amendment to strengthen student loan servicing and protections for private student loan borrowers and to provide greater transparency and accountability for campus-based banking products beyond just credit cards. We've all read about many abuses that are taking place, and we owe it to our consumers everywhere to ensure that these abuses are detected and prevented. Continuing this focus on consumer protections, another of my amendments responds to the difficulties that Rhode Islanders face when trying to secure a loan modification by taking greater advantage of branch banks. If you're able to walk into a bank branch and get a mortgage, then you should also be able to walk into the same branch and get help to avoid preventable foreclosures. What we found in the crisis was that was not often the case. They could get a loan at the branch, but to get any type of assistance, they had to call a servicer or to go someplace else. My amendment, which is supported by the National Consumer Law Center and the National Association of Realtors, establishes a pilot program to see whether this would be feasible, whether we could get branch banks not only to make loans, but also to help borrowers when they come into difficult circumstances. I've also filed an amendment that would direct GAO to conduct a retrospective study of the impact of the provisions of this legislation on economic growth and consumer protection. Specifically, my amendment asks GAO to evaluate the bill's impact on non-managerial wages, senior executive pay, stock buybacks, the interest paid on savings or money market accounts, jobs being moved abroad, foreclosure rates, and enforcement actions. In so doing, we will be able to determine whether the legislation actually delivers on the claims by its sponsors of economic growth and consumer protection. I think we always have to go back and check our work, and this provision would allow us in a formal and systematic way to check our work. I hope we can do that. Finally, I have filed an amendment supported by former Federal Reserve Chairman Paul Volcker to retain and strengthen the Federal Reserve's emergency safety and soundness powers. To quote Chairman Volcker, "It's clear that circumstances can arise where the activities of some banks with less than $250 billion in assets would pose a grave threat to financial stability. To address such a threat, regulators have certain tools in their arsenal that we wish they will never have to use. Senator Reid's amendment wisely restores and strengthens one such tool, allowing it to be deployed under limited circumstances and only upon approval of a supermajority of the Financial Stability Oversight Council. Surely we should at very least agree to preserve and strengthen the ability of our financial regulators to avoid grave threats in another financial crisis." Before I conclude, I'd like to make one further observation. 10 years ago today, few of us knew ahead of time that we would see an economy that would collapse into depths that we did not anticipate. Our nation would literally recoil due to the recklessness and unchecked greed of too many on Wall Street. We should not forget that nationally, over 8.6 million jobs were lost between January 2008 and January 2010, with over 33,000 jobs lost in Rhode Island alone. If anything, the Wall Street Reform and Consumer Protection Act was a sensible and long overdue response to the realities that people are nowhere near perfect and cannot always be trusted to do the right thing. We learned in the hardest and most painful ways that certain safeguards are necessary. Unfortunately, the bill before us today removed some of those safeguards. Absent any serious changes made to the bill during this week's debate, and for all the reasons I have stated, I cannot support it. And with that, Madam President, I would yield the floor.